Many hundreds of millions of dollars are on the line. Something terrible is transpiring in the background. The fact that this is actually happening is astonishing. Something incredibly terrible is about to happen in just one day. Given the essential nature of this film, we should spare no words and get down to brass tacks. Investors have gone through a wild ride in the wild world of cryptocurrencies over the past few weeks. The market seemed to be starting to recover when a second crisis hit. Many people are perplexed and taken aback. The cryptocurrency community was rocked by yesterday's sudden price drop. But why has this wild roller coaster been happening? You may remember that the first ever crypto ETF was approved 2 months ago. To be more precise, the Bitcoin ETF allowed a flood of money to pour into the cryptocurrency market. Prices reached unprecedented heights as a result of the daily influx of hundreds of millions of dollars, which caused a frenzy. Particularly noteworthy is the meteoric rise of Bitcoin, which shattered the $70,000 mark and beyond. One cannot and must not underestimate Bitcoin's significance as a driving factor behind the present cryptocurrency market revolt. Any movement it makes has a domino effect on the surrounding environment, changing the trajectory of other assets, especially Shiba Inus. As we have witnessed firsthand, Shiba Inu's behavior is very similar to that of Bitcoin, the market leader. When their respective values rise and fall. Given the recent meteoric rise of Shiba Inu, which saw increases of over 200% in only 1 week, it would be foolish to minimize the significance of Bitcoin. This exemplifies the interconnected nature of the cryptocurrency industry and the profound impact that Bitcoin's innovations have had on other coins. Still, what happened yesterday that sent Bitcoin prices tumbling again? You have raised an excellent point. Investors finally felt a wave of comfort as the cryptocurrency market seemed to be catching its breath after suffering through multiple crashes. Indications of healing started to emerge in the distant, and hope started to spark. However, this optimism was short-lived. There were glimmers of hope, but the market swiftly reverted to its chaotic state. The record-breaking $154 million in a single day came from the Bitcoin ETF, which is why it happened yesterday. This massive exodus from ETFs triggered a domino effect that led to a precipitous decline in Bitcoin prices. Once again, prices dropped across the board in the Bitcoin market as a result. This is actually not the first time anything like has happened. Something similar, albeit less significant, occurred on March 1st. However, no event has had a bigger impact on the movement of Bitcoin's price than yesterday's withdrawal. However, how much longer can we expect the Bitcoin market to remain in its downward spiral? Why, therefore, did investors suddenly stop pouring money into Bitcoin ETFs? Is this the end of the road, or is there more to come? We'll look into that, alright. A Twitter user who warned that Bitcoin was going to enter a danger zone gave a rather detailed explanation. Before it was slashed in half, the statistically dense tweet painted a gloomy picture of past retracements and potential market downturns. The tweet reads as follows. Eventually, Bitcoin will formally enter the orange danger zone, the spot where previous pre-halving retraces began. Bitcoin price retracements between 14 and 28 days prior to the halving are common. This break, which began just 14 days before the 2020 split, become 20% deeper. Despite its brevity, this dip preceded Bitcoin's parabolic ascent, which began with a reaccumulation phase lasting over 150 days. Starting 28 days before the halving, the pre-halving retrace in 2016 was 40% deep. This pullback lasted for a full 8 weeks before Bitcoin began its meteoric rise. About 29 days remain till Bitcoin's halving. And last week it fell by 11%. This ominous forecast suggests that Bitcoin would soon see a steep fall, following patterns observed in the run-up to previous halving events. Based on the data, it appears that the market could experience prolonged bouts of volatility and potential retracements. At this point, you could be thinking, okay, I get your point. Many are cashing out their cryptocurrency holdings as they brace themselves for a potential price crash. That they can buy them again for less money. Having said that, it's far from easy. Despite the reasonable expectation that investors will sell their crypto assets in preparation of price drops and repurchase them at lower prices, the market's current behavior creates a perplexing dichotomy. Assets are exiting exchanges at a faster rate than they are entering them. The mysterious trend raises doubts about the common sense of purchasing cheap and selling high. Nothing makes sense. The execution of sell orders by those who are eager to unload their cryptocurrency holdings in anticipation of price drops would cause exchanges to experience a surge in Bitcoin inflows. However, the reality is quite different, as evidenced by the significant withdrawals from exchanges indicating a lack of willingness to part with assets. Also, some Shiba Inu whales act in this perplexing way. Over 500 billion Shiba Inu tokens were removed from Coinbase yesterday by an unidentified group. So what is going on here? At this moment, it simply does not add up. This apparently contradictory market action might be due to an interesting event that is made clear by an enlightening tweet. According to the tweet, Bitcoin is still in a moving market, with holders holding 10 to 100 Bitcoin instead of 0 to 10 Bitcoin. This finding suggests that some whales who are still aggressively amassing Bitcoin holdings despite the present market downturn are shifting their strategy. Contrary to popular belief, this is an intriguing strategy. Instead of selling their assets in the hopes of a price drop, a number of whales are gradually increasing their positions and putting more money into their investments. Rather than succumbing to panic and making rash sales, they are taking the initiative to produce larger holding bags in the face of market uncertainty. The logic behind this novel approach becomes clear upon closer inspection. These whales are buying cryptocurrency assets at low prices to position themselves for future rewards. They are well versed in the historical trend of cryptocurrency prices skyrocketing following Bitcoin events. As a whole, these whales are being cautious in the hopes that the market will explode following the halving. They are capitalizing on the market's natural cyclicity by preparing for the inevitable recovery that follows periods of consolidation and regression, rather than allowing short-term volatility discourage them. This strategic amassing of assets by institutional players in the crypto ecosystem demonstrates their knowledge and vision. Ordinary investors can be swayed by market emotion and short-term fluctuations, but institutional investors often have a more clear strategy and vision for navigating difficult times. Still, the Shiba Inus deserve our whole attention. After Bitcoin is cut in half, you might be asking how much a Shiba Inu will cost. Many investors have been thinking about this recently due to the market's instability, and you might be surprised by the answer. Shiba Inu has received mixed news from CoinCodex, a leading provider of on-chain analytics and price predictions. Their research indicates that after the Bitcoin halving, Shiba Inus can see a staggering boost of up to 225%. This forecast suggests that Shiba Inu might reach new heights, perhaps surpassing the 49-cent barrier, further surpassing its previous all-time high. For investors who have stuck with Shiba Inu through thick and thin, this prediction might be reason to celebrate. Shiba Inu has been unstable and stagnant for over 2.5 years, so any indication that it may finally shatter its all-time high would be a welcome development. It is essential to exercise caution while making such forecasts, though. Investors may feel encouraged and enthusiastic by optimistic predictions, but keep in mind that these are just that, prospects, not guarantees. The cryptocurrency market is notoriously unpredictable, which means that price variations can be impacted by many things. These include changes in regulations, market sentiment, and general economic trends. Investors who have been steadfast in their belief in the token's long-term potential might take heart from the forecast for Shiba Inu's post-halving performance. Having said that, how do you feel about that? If you have a moment, please leave a remark below. I would love to read them. For further information, please select one of the videos that is shown on the screen. This is the last segment of the video. If you enjoyed it, please hit that like button, leave a comment, and spread the word to as many people as you can. Both the news's dissemination and YouTube's algorithm are enhanced by this.